to Bob Pisani now with today's ETF Edge. Downside protection. We're talking about that, Bob?
We need it, Scott. With all the turmoil in the markets, there is increasing interest in ETFs that provide downside protection. Now, one strategy known as buffers use options to provide downside protection. Let's talk with Brian Lake. He's the head of America's ETF distribution at Goldman Sachs. And Brian, Goldman just came out with a buffer ETF last week. I want you to explain to us, how do these buffers work? What kind of protection are you getting? And what are you giving up on the upside?
Yeah, well, you know, Bob, you're an investor, I'm an investor. We think about how investors come at this, and there's more uncertainty than ever these days, whether it's tariffs, whether it's geopolitical, whether it's the broadening out of the Mag 7. Investors have a lot of questions. The beauty of a buffer strategy, and the ones that we launched, the suite of 3 products, is they can provide downside protection, so they'll protect between 5 and 15% on the downside, while also allowing you to participate in upside, often 5 to 7% on the upside. And with all that uncertainty, that helps give investors a level of comfort that they can deploy these in their portfolios.
So there's 3 of these, I know, and each one resets every 3 months. I know it's very important to buy near the reset date, then hold them throughout the entire period. Why is that an important part of this strategy?
Yeah, we made it really easy. That's why we did a suite of these, because, as you say, each of them reset each month, but we staggered the launches. So at the beginning of each month, there is an ETF that's now resetting its buffer point to give you that downside protection and the upside participation. So thinking about that is where you want to look, and that resets every quarter, to your point. But we have all 3, so each month it's ready to go.
I want the viewers to understand here, what's the risks? What are the considerations here of investing in these buffer products? So there's obviously some timing issues, it seems. Mm-hmm. Tell us about that. Expense ratios, market conditions. What's the risks here?
Yeah, well, these are tried and true strategies. These have been the types of strategies that sophisticated investors have been deploying for years. We're now making them available in an ETF, but because you're using equities and using some options to help get these buffer outcomes, there is some embedded costs that come along with that. And so the expense ratio on the products is 50 basis points. You should be aware of that. But we think being able to buy these through the ETF listed on the exchange is a really good value.
But tell me about flows last few weeks.
Yeah, no, like this space has doubled over the last year. And so we think that there's going to continue to be interest for investors that are looking for these outcomes.
All right, thanks, Brian. We're going to have a lot more on this and talk about buying protection, using buffer products and other products to provide downside protection. That's going to be coming up on ETF Edge at 1:10 p.m. Eastern Time. Brian is going to be joined by Mike Akins from ETF Action. A lot of strategies here on protecting the downside. It's etfedge.cnbc.com.